For investors who are looking to generate consistent income from their portfolio, dividend stocks are a popular investment option to consider. Dividends are payments made to stockholders, typically on a quarterly or annual basis, that represent a portion of the company's profits and are distributed in the form of a stock. Here is all about dividend stocks for your portfolio. What are dividends? A dividend is a stockholder's share of the company's profits. The company's board of directors has authorized their distribution, which is made in either cash or stock. The business uses its right to retain net profits to fund its ongoing and future business plans, then pays out the remaining amount as a dividend to shareholders. The board of directors also establishes a schedule for dividend distributions. They can be paid out quarterly, annually, or even monthly, with the latter being the most typical. The company may occasionally pay a special dividend that is paid only once outside of its regular schedule. Additionally, if a business is flush with cash, it may decide to pay a one-time dividend even if it does not typically do so. You need to invest in a dividend-paying company in order to receive dividends. A dividend is available to stockholders who own even a single share of a company's stock. The greater your stock holdings, the larger your dividend payments will be. Why invest in dividend stocks? Stocks that pay dividends are appealing to investors because they guarantee a steady income stream. Companies that pay dividends are usually more established and financially stable, so they can act as a buffer against the market. Payouts from dividend stocks can be reinvested or used for day-to-day expenses, making them a great source of passive income. Stocks that pay dividends and rise in price over time are excellent investments for the long term. Companies with a history of dividend increases are often viewed as financially stable and well managed. As a result, the stock price of the company may rise, and the shareholders may realize capital gains. Top dividend stocks for your portfolio. Number 10. Archer Daniels Midland. Archer Daniels Midland is an agriculture company that focuses on conducting research and development for creating products for human and animal nutrition, as well as biosolutions for a variety of industries and farming-related services. It offers a dividend payment of $1.60 per year, and its yield is 1.69%. Number 9. Pfizer. The production of vaccines, treatments for diabetes, cardiovascular disease, and cancer, as well as consumer healthcare products, are Pfizer's primary areas of concentration in terms of production. Pfizer pays out $1.60 per year in dividends, which results in a yield of 3.44%. Number 8. 3M. 3M, which stands for Minnesota Mining and Materials, is a company that conducts research and develops new materials for use in a wide variety of industries and applications. Some of these applications include adhesives, electrical components, building materials, office supplies, and more. The dividend payout to shareholders each year is $5.96 per share, and the dividend yield for the company is 4.69%. Number 7. ExxonMobil. ExxonMobil is a multinational oil and gas corporation that conducts business all over the world. Despite the fact that the company has had to overcome a number of obstacles in recent years as a direct result of the fall in oil prices, it still holds a powerful position within the sector. In addition to having a dividend yield of approximately 5.5% and having maintained its dividend payment schedule for more than a century, ExxonMobil is an excellent and trustworthy option for dividend investors. Number 6. Microsoft. Microsoft is a multinational technology corporation that develops and markets a wide variety of computer software and hardware products, such as the Windows operating system and the Xbox gaming console. The dividend yield of the company is approximately 0.8%, which is lower than the dividend yields of some of the other companies on this list. Nevertheless, over the course of the last 10 years, Microsoft has maintained a steady increase in the dividends it has distributed to shareholders, and the company is in an excellent position for continued expansion. Number 5. Abbvie Incorporated. Abbvie is a pharmaceutical research and development company that creates medicines for use in the treatment of medical conditions. It has a yield of 3.95% and provides an annual dividend payment of $5.64 per share. Number 4. Cardinal Health. Cardinal Health is a provider of a wide range of medical services, some examples of which are laboratory services, hospital pharmacies, home care, and community health centers. The dividend is paid out annually at a rate of $1.98 per share, which results in a dividend yield of 2.97%. Number 3. Visa. The company known as Visa is in the business of processing payments and offers its services to merchants and financial institutions all over the world. Since it went public in 2008, The company has steadily increased the amount of dividends it pays out while maintaining a dividend yield of approximately 0.5%. Because of its dominant position in the payments industry and expansive presence around the world, Visa is an excellent option for dividend investors. Number 2. Procter Gamble. Consumer goods manufacturer Procter Gamble is best known for its Tide laundry detergent and Pampers diaper brands. The company also manufactures a wide range of other household and personal care items. The dividend payout has increased for the past 64 years in a row, and the company currently has a dividend yield of approximately 2.5%. Investors looking for a reliable option can find it in Procter Gamble thanks to the company's extensive brand portfolio and widespread presence. Number 1. Johnson & Johnson. The healthcare conglomerate known as Johnson & Johnson manufactures a vast assortment of goods, some of which include pharmaceuticals, medical devices, and consumer health products. The dividends have been distributed by the company on a consistent basis for many years, and the current yield is somewhere around 2.5%. Because of its solid financial position and consistent growth, Johnson & Johnson is a stock that many dividend investors choose to hold in their portfolios. How to identify high-quality dividend stocks. When deciding which dividend stocks to include in your portfolio, it is essential to consider factors other than the dividend yield alone. A high yield may be an indication of an appealing income stream. However, it may also be a warning sign if the company is experiencing financial difficulties or has payout ratios that are not sustainable. Instead, investors ought to center their attention on businesses that have a solid track record of dividend payments and that have maintained a consistent rate of dividend growth. Companies that have a lengthy track record of paying dividends are typically well-established, financially healthy, and have a demonstrated ability to generate cash flow. In other words, they have a track record of success. Look for companies that have a history of increasing their dividends over the course of time. This can be a sign that the company is committed to returning value to its shareholders and has the ability to withstand changes in the market. Investors should also look at the company's payout ratio, which is the percentage of earnings that are distributed as dividends. This ratio measures how often dividends are distributed. A high payout ratio may not be sustainable over the long term because it leaves little room for the company to reinvest in growth and may lead to a cut in dividends if earnings fall below expectations. A payout ratio that is considered healthy typically falls somewhere in the range of 40 to 60%. This allows room for reinvestment in the company while still providing a stable income stream to shareholders. The addition of dividend stocks to your investment portfolio can be beneficial because they can provide both a consistent income and the opportunity for capital growth. When selecting dividend stocks, it is important to look for companies that have a track record of making dividend payments that are reliable and long-term, that have solid financial health, and that have a diverse portfolio of asset classes and industries. If you adhere to these guidelines, you should be able to construct a diversified investment portfolio that will bring in consistent income for many years to come. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.